Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon. Before we get started, let's first get a glimpse of today's highlights. Having a college degree no longer seems to guarantee that young Koreans will land quality jobs, as latest numbers show that nearly 1 in 3 graduates is unemployed. Figures indicate that Korea's income gap has narrowed over the years, but average citizens are not feeling that way. Why so? We have these stories and more coming right up. The protracted economic slowdown in Korea is weighing on the job market. Even people with degrees from good schools are struggling to find work, largely due to good quality and well-paying jobs drying up amid the sluggish economy. Our Kim Min-ji starts us off.
In yet another signal that Korea's labor market is in dire straits, nearly 1 in 3 people who are currently out of work have a degree from a 4-year university or higher. According to Statistics Korea, the number of unemployed came to 985,000 in the third quarter of this year, while 315,000, or almost a third of the total, had graduate degrees. The figure is the highest since relevant data began to be compiled in 1999, and it's also the largest proportion of people with degrees who are out of work. Even in the aftermath of the Asian financial crisis in 1999, the proportion of unemployed people with university degrees stood at only 12%. However, the figure has been on a steady climb since 2011, with the exception of a slight dip in 2014. Experts attribute the rise mainly to the country's high university entrance rate. The rate stood at almost 71% in 2014, the highest in the OECD. As a result, although there are more university graduates, there's a mismatch in employment due to a lack of quality jobs amid a sluggish economy. The overall jobless rate stood at 3.6% in September, the highest for that month in 11 years. The youth jobless rate came to 9.4%, also the highest monthly figure tallied since 1999. And in another reflection of the feeble job market, the number of people in Korea who work 17 hours or less a week hit a 5-year high in the third quarter of this year. The figure stood at around 1.3 million in the July to September period, up 91,000 from a year ago. The rise was attributed in part to the government's push to offer flexible working hours for women who previously had difficulty finding work after giving birth or because of child-rearing responsibilities. Another reason cited was the weak economy, which has forced companies to hire more part-time workers than full-time employees. Kim Min-ji, Business Daily.
Calls for a revision to Korea's tax code have been growing louder as more and more people are concerned about a growing divide between the haves and the have-nots. The government has pointed to an improving Gini coefficient to say income inequality is in fact improving. And our Eunice Kim explains why some experts say that this does not reflect the complete picture.
On the surface, income distribution looks to be improving in Korea. Both the Gini coefficient and income quintile share ratio have dropped over the years through 2015, indicating that the country's income gap has narrowed. But ask your average citizen on the street and they'll paint a different picture.
To get hired, you have to build your resume, which costs money. Friends of mine from well-to-do families seem to have no problem, but I feel defeated.
The wealth gap is growing. It's a society where the rich gets richer and others, no matter how hard they work, can't get ahead.
What did the benchmarks miss? For one, the Gini coefficient is a measurement of income distribution, not overall wealth. Note that as the figure moves closer to 1 from 0, this indicates a more unequal distribution of earnings. Secondly, it does not take into consideration the weight of household debt, which has consistently grown. In some cases, loans were taken out to fund day-to-day costs of living. In fact, examining 2014 data, one university professor's research found that if one's income was recalculated to subtract their loan principal and interest payments, the inequality gap would expand. And what if wealth was included in the measure? One research institute set out to find out. Unsurprisingly, its analysis showed the disparity would worsen across the bases of disposable income and worse when considering net assets and real estate.
Not only is income inequality severe, in many cases, many wealthy get richer through easy channels like real estate speculation and inherited wealth.
It's a vicious cycle that's become too painfully familiar for many in Korea. As the rich get richer, those left out watch on helplessly as their spending capacity falls, in no clear benefit to the economy at large. That's why some experts are calling on the government to do more to level the playing field. And one of the suggestions is to revisit the country's tax system. Eunice Kim, Business Daily.
A British maritime research firm has predicted brighter prospects for the global shipping industry, which has suffered from dwindling orders and eye-watering losses in recent years. According to a report by Clarkson Research Services, orders will continue to lag in the short term, accounting for just one-third the annual average over the last 2 decades, or roughly 2,200 orders a year. The research firm expects 586 orders this year and 790 next year. But the good news is that global shipmakers are expected to recover starting in 2018, with orders doubling compared to 2017, and the upward trend is set to continue through 2020. Over on the stock market counter, Korea's top 10 business groups have seen their combined market capitalization expand by nearly $32 billion. That's up 5.4% from the end of last year as of last week, Wednesday. Korea Exchange says Hyundai Heavy Industries led the gains. Its market cap surged by 57.3%, followed by POSCO Group and SK Group. Both also registered double-digit increases. Gains for Samsung Group's market cap were still in the black, up 7.7%. LG Group's market cap registered the biggest fall, down 11.8%. The Korean equity market was mixed on the first session of the week. Overall market moves still appear to be following sentiment among foreign investors and a few blue chip stocks. We're now joined by our markets contributor Choi Jin-suk to talk more about market conditions and what to expect this week. Hello, Jin-suk.
Good to be back.
All right, so let's start off with today's market close. How are the numbers looking on the first trading day of the week?
The Kospi market rose again to close at 2027.61, up 0.2% from the previous session, while the Kosdaq closed with a slight downtick. The Kospi once dipped to as low as 2011 in early hours, but soon recovered, helped by foreign investors who changed their position to buy. The intraday trend on the Kospi was just like that of Samsung Electronics, including Samsung. A few blue chip stocks, including KEPCO, SK Telecom, and LG Chem, led the rally.
So how was the last week's overall market performance? I mean, there were definitely some factors that spooked investor confidence.
That's right. Despite the rebound on Friday, the Korean stock market failed to stay in positive territory. The Kospi and Kosdaq both plummeted by 1.5% and 1.6% respectively. There were plenty of negative catalysts to drag down both indexes. First, foreign investors unloaded massive amounts of shares last week. They sold more than 700 billion Korean won, or about $615 million worth of stocks, mostly due to Samsung Electronics that announced a downward revision in the company's earnings. Second, the strengthening dollar triggered an outflow from foreign investors in the Korean market. And lastly, the overall earnings picture in the third quarter wasn't looking so positive.
And as we've saw all last week, I guess the foreign exchange market is still in the spotlight. So what events do investors need to take a close look at in this regard?
Since even the smallest changes in the Federal Reserve's stance has been causing the appreciation of the US dollar as well as overall turmoil in the FX market, investors definitely want to take a close look at the events related to the Fed's future rate decisions. Fed Chair Janet Yellen said on Friday there may be benefits to running the economy with a tight labor market, sending a dovish signal to financial markets. Vice Chair Stanley Fischer will speak on Monday local time. Tuesday's consumer price data is important too because the Fed has been closely watching inflation trends. We can get some hints of economic conditions in the U.S. through the Fed's Beige Book released on Wednesday. Also, a number of Fed officials will speak from Wednesday to Friday as well.
And the Q3 U.S. earnings season will also be in full swing as well. So what's the overall picture on that so far? And also, what companies should investors look closely at this week?
About 80 out of S&P 500 companies will unveil their quarterly results this week. Market research firm FactSet says with 7% of the companies in the S&P 500 reporting so far, 76% have reported earnings above the mean estimate and 62% have reported sales above the mean estimate. Major U.S. banks, including Citigroup, JP Morgan, and Wells Fargo, reported better than expected earnings last week. Therefore, the beginning doesn't look so bad. The Bank of America, or the BOA, and Goldman Sachs will report their earnings, and tech giants including Intel, Microsoft, Yahoo, IBM, and Netflix are the companies reporting their results this week as well.
And as we just saw on that calendar, the Chinese government will also unveil Q3 growth figures this Wednesday. So what are the expectations on that?
Although investors seem to be less jitterish about economic indicators compared to the past, you can't overlook the importance of GDP data. Any signs of economic slowdown from China can spook sentiment in global financial markets. Expectations, though, are not that bad. Experts expect the Chinese economy grew 6.7% year-on-year last quarter. The country's GDP expanded by 6.7% in the second quarter as well. Since other economic data such as retail sales and fixed asset investments met market expectations, experts do not think the data this week will serve as a negative catalyst.
All right, thank you so much for that today.
Thank you.
The fuel surcharge for international flights ticketed in November will be waived yet again amid continued low oil prices. Korea's two major airlines, Korean Air and Asiana Airlines, said the next month will be the 15th consecutive month since the fee has been lifted. This comes as the average price of the benchmark Singapore jet fuel measured from September 16th to mid-October stood at around 137 cents per gallon. A surcharge is imposed when the average price is 150 cents per gallon or higher. The surcharge for domestic flights, on the other hand, will remain at around 96 cents. The ratio of young Chinese tourists in their 20s and 30s is on the rise. While the majority of visitors were mostly older group tourists before, Korea Tourism Organization said the proportion of visitors in the younger age bracket topped 50% last year. This is largely due to an increasing number of independent travelers born after the year 1990. The change is clearly reflected in the pattern of sales at Korea's duty-free stores. The nation's leading player Lotte Duty Free said the ratio of Chinese under the age of 40 reached 86% in the first half of this year, while those older than that took up only about 13%. Hotel Shilla also said that those in their 20s to 30s accounted for about 77% of Chinese customers in the first 9 months of this year. Countless efforts have been made over the years to use technology to make farm work less taxing. Now, companies and the Korean government are looking to make things even more efficient with the help of smart farms with greater connectivity and intelligence. Our Lee Ju-young has the story.
Farming has gotten a lot more convenient for these farmers ever since one of the country's largest telecom companies, KT, built this smart farm facility specifically with the disabled in mind. The vinyl greenhouse is equipped with plant beds raised to waist height, also allowing farmers to manage their crops more scientifically based on big data analysis.
It's much more convenient now. Taking care of the vegetables gives me joy, and I work with ease every day.
After the crops are harvested, they're then sold to restaurants run by famous chefs.
We believe smart farms will become the new paradigm for job creation and provide us with the opportunity to make social contributions for the disabled.
And these high-tech farms are not limited in their use. Smart farms in general are considered one of the most promising solutions to revolutionizing Korea's stagnant agricultural sector, struggling with a fall in farming households and an aging population. The Ministry of Agriculture, Food and Rural Affairs has allotted about $40 million this year to smart farm technology development, up almost double the amount from last year. The state-run Rural Development Institute has also pledged to pour in about $12 million in research and development from back in 2014 to 2017. While big companies like LG CNS, specializing in information technology, have also launched large-scale research projects to develop low-cost smart farm systems, experts say Korea's technology is still at basic levels compared to countries in Europe and Japan. They add the public and private sector need to continue to work together to ensure the country doesn't fall behind in advancing this key technology, which will shape the future of Korean agriculture. Lee Ju-young, Business Daily.
And that wraps it up for today, but we'll be back tomorrow with more at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching and goodbye.